Hi guys, for those who actually missed our free session yesterday, I just want to do a quick recap on what I was actually talking about. So right here we have a border. Let's just assume that there's a border between South Africa and Mozambique, right? And Mozambique is there, SA is this side. Okay, so obviously, if you are a normal person, right? When you get to this fence, you will have to think twice before you jump over to the other side. But there are those who were coming, and when they saw this fence, they were like, "Ah, we're going back." Okay, but there are those who broke out. But you have to think immediately when you see this particular structure. You have to at least think of something. Maybe you have to think about how you're going to break out. Or maybe let's say you break out when you're on the other side, you realize that maybe there are cops or soldiers, then you come back. This is the exact thing that you should do when you're actually looking at your charts, especially from support and resistance perspective. So in the case of this one, when price is moving towards resistance, obviously buyers are responsible for that. Okay, we know there's buyers who are pushing this. Of course, you need to be able to identify structure properly. I've seen a lot of people drawing structure in the wrong. There isn't a perfect way, but at least they should have a set of rules in that you use to draw this particular levels. Okay, so buyers are responsible for that. But remember what I said. There are those when they see this structure, they are going to chicken out. They're going to run away from the border. Okay, they're going to run away from the border. They're there and they're like, nah, I don't want to go to the other side of the border. Okay. So in this case, there are those who have buy orders already. When they see this zone, they're going to start scaling up. They're going to take their profits. So in other words, if there was 500 buyers, some buyers are going to close their profits when they see this zone. So if there was like, let's say maybe there was 500 people who were willing to jump the border. Some will be able to jump, but some are going to turn and think twice about that. So it's the same as this concept whereby you are basically taking profits before structure. And that causes some sort of pressure to the market. But remember, you have identified predetermined the structure. So most of the times people, they will see this move to the downside and then they start staking up sell order without realizing that people who were buying were actually looking at this zone as a threat, and this is a borderline, and they started closing profits from it. Okay, and then you will see price correcting, then it goes up, hit your stop losses. If you sold there, your stop loss is gonna go up, hit your stop loss. Then there are those who are definitely going to clear the last batch of buyers, those who bought there. Even if it's not the last batch, but there is gonna be people who are going to reduce those things, and there's gonna be sellers who will be selling here. The ones who are selling here are the ones who sells out of FOMO, including the people who are taking profit before the zone. These are the people who say it's on the zone, it's on the zone, guys, sell without any evidence. These are the ones, fear of missing out. Okay. So you most of the times before price reaches a higher time frame, higher structure zone, you will see it's gonna pull back a little bit. So you need to know if that's profit taking, people are taking profits, or price is reversing. Of course, that's when you have to gather evidence. But most of the times, if there isn't any sort of reversal signal in the form of evidence, price is most likely to go up until it gets to the price level or the zone where it's supposed to get to. And I asked yesterday, between 1, 2, and 3, where would you want to sell? Okay. Most of you said 3, which is right. Because up outside the zone, it's like a fence. So if it's you outside here and there's a dog on the other side, okay, the dog being the stop loss. Obviously, you can provoke the dog knowing that there's a fence or a barrier in between. It's the same concept. It's the same method that we use to place stop losses. But most of the times, price is going to come up, break out of that zone, clean all stop losses that are hidden here, and then comes back down. You have seen that with NASDAQ. Go and check NASDAQ and check the previous videos that I did. Okay, so it will show you the most practical sort of examples of how this concept works. Okay, so after cleaning these stop losses, because there isn't more buyers than there was, the number of buyers have been reduced. Okay, and the number of sellers as well. Institutions are always looking for higher prices to reverse prices from. Okay, and most of the times those prices are not on the zones. They are not on the zones because everyone is getting inside on the zone. Okay, and that is not liquid enough for those who are trading huge funds. So they cannot be staking up orders here on the zone. They sometimes place orders before the zone. Okay, sometimes they put it outside the zone. That's why people will tell you that this is stop hand prices, looking for stop loss and all. It's because those big guys are not really looking at what we are looking at. They're doing the opposite. So similar to when you are doing buys and all that, it's a similar concept, just flipped around. There are those who sold driving price to the downside. When they see the border, they take profits, causing price to correct. Okay. And then price touches that zone, cleans out stop losses. And institutions are looking for those spots where there isn't a lot of buy orders stack. It's all about liquidity in the big the institutional trading world. It's all about liquidity. Okay? But in order for them to place their positions nicely, they need to find better prices. Now, other prices where, or rather areas whereby they are not crowded. Here on the zone, everyone can draw this support and resistance. But people say support and resistance doesn't work. Are you sure about it? Are you sure about it? What if you are drawing them wrong, number one? What if you are trading them wrong, number two? Okay, so this some of the things that you can do. Look at, always look for better areas, particularly outside the zones. Other people I know, they're gonna say, but outside the zone, price have broke the zone. I'll be looking for a sell. The basics for trading is sell low, sell high, buy low. So you can see outside the zone, it's just creating a much lower level. Okay, it's just giving you a much better price, much liquid price where you can be able to fill your order. So that's actually something that I discussed yesterday, and using the box method, forget that one. This is exactly what happens. Yeah, maybe this could be your predetermined structure or your daily high, depending on the scenario. Okay. And then the next day price breaks out of that daily high, look for stop losses, then it starts reducing. Go and look at what happened on NASDAQ, right? Or what actually happens most of the time on NASDAQ. Even when you're moving in a trend, there needs to be something like this, and price reversing goes back up just like that. But the concept it's more or less the same, because there are zones that are being taken somewhere in space. Okay, so this is just a quick. I don't want to make this video long. Should you have any questions, don't forget to like, subscribe, dislike, and comment in the description box down below if you like these videos or you don't like these videos. I'm talking crap. And you can also join our Telegram channel there, and the YouTube channel name. There we go. So that's just a quick way of, or the summary of what I actually did yesterday during our free session. Otherwise, my name is Vindi. Should you have any questions, hit me up on Telegram, WhatsApp, there's a link in the description down below. Please don't say hi, hello, guys. I repeat, just get straight to the point. You can greet and say 1, 2, 3, 4, 5. I love your videos, stuff like that, and all that. Right? But I don't want to do hi, hellos. Okay. Thank you for watching.